What is going on, guys, and welcome back again to my channel. In today's video we're going to be talking about stop loss and take profits. Yes, that's correct. We're going to talk about where and why you should put your stop loss there, not there, here, not here, outside of a fluctuation zone, not inside of it, and why the market could hit your stop loss and how you can prevent that from happening more often. So without further ado, let's just jump into the charts. So we have AUD/USD, just a random playing chart. We're gonna strictly just be talking about stop loss and take profits and why you should put it there, not there. So first things first, let's say we are now trading right here, all right? Let's say we are trading right here and we see this bullish engulfing candle, and let's say you wanna enter, all right? So first things first, what we do is we grab our long position right there. Now, where would you put your stop loss here? Now, obviously, I don't have my levels here and my key levels and support and resistance and everything else, but let's just talk about why you shouldn't. Let me just scale down to the 1 hour time frame, because that way we have more details to explain. Let's say you enter right there and you put your stop loss right below here. Now, why this is wrong and you shouldn't put it there is because this whole area right here, from here to here, is a fluctuation zone. What that means is the market can, if it wants to, come up, create the bullish engulfing, right? You've had your rejection and you enter right there. The market could push up a little bit and still come down all the way here, right? And even wick below this level. It can wick below that level and then continue all the way up, and you would have been stopped out. So how can we prevent that from happening? Why we shouldn't put our stop loss there? The reason why I would put it just below here when I enter here is because this area is a fluctuation zone, which means the banks are moving the market and they're looking to take people's money. It's just that simple. They are trying to take people's money, right? So the market could literally wick and do everything that it wants to do here, as long as the candles don't close below this level, then we're good. And this is why you need to put your stop loss below market structure. Let's say market moves in higher highs and higher lows, right? So your stop loss needs to be, let's say you enter right here, right? Let's say you enter right here. Your stop loss can't be there. It just can't, all right? It doesn't make sense. Your stop loss needs to be below a previous structure point, right? So you look to the left. Where is structure point? In this case, we have it right here. This is our previous structure point, right? And this is our entry. So that's where your stop loss should go. Because for the market to break structure, that means your whole bias is wrong and you shouldn't be buying, you should be selling, because now the market is broken structure and it could trend the downside. So this is why you need to put it outside of our fluctuation zone. This whole area, stay away from it, put your stop loss somewhere safe, and your take profit should be, you can look to the left and see where also previous structure is, and you put it accordingly. So I hope you guys understand where and why you should put your stop loss below a previous structure point, not in the middle of a fluctuation zone, because the market can wick. Look at these massive wicks in the market. You could have put your stop loss. Look what happened here. If let's say you've entered a trade right here, short position, let's say you've entered a trade, but you've put your stop loss here. It doesn't make sense. Look, you would have stopped out. The market wicked all the way up. And because the market knows where a lot of people put the stop loss. That's why you need to put it somewhere safe, right? The market did not break structure there because it never closed, because it never closed above this market structure level. It wicked above it. It's a form of a stop hunt, they call it. A lot of people call it differently, but this is basically stop hunt. Basically, if you want to say that, you can. But yeah, guys, this is where you should put your stop loss, and not in a random place or inside or outside of a fluctuation zone. So now, if we want to talk about take profit, how do you find the right take profit level? Right now, let's say and stick to this long position here that we've entered, and let's say we've put our stops in a safe area here, down here, and now we look to the left. You zoom out. Always look at the bigger picture. Don't be zoomed in. I'm on the 1 hour time frame. Don't be on the 5 minutes and trying to find stop loss. No, look at bigger time frame. Put your stop loss at a structure point on higher time frame, because that is a much major point than these smaller time frames. So we zoom out and we look at the bigger picture, and we can see here clearly that what do we have here? We have structure right there. We have structure right here. So what you can do is target previous structure. You have to always look to the left, and this trade would have been a perfectly hit 1-to-4 risk reward ratio. But if you would have put your stop loss so close, the market could have probably wicked down and stopped you out the same way it did here. And also, you do not want to have unreasonable take profit. For example, don't go and be like, okay, that's the previous structure, so I'm just gonna put it up here. It's just it doesn't look right. Look to the previous structure. So when you look at the most recent structure, you see we have an impulse down, an impulse move down here, and then an impulse move up, corrected it. So that's when you buy after a bullish engulfing. This was a bullish engulfing on the 1 hour. The 4 hour, sorry. It was a bullish engulfing. Where we here, right there. So yeah, this is why you buy after a bullish engulfing, because a bullish engulfing indicates that the buyers are now in control, and now it's time to push it up. So always stop loss below previous structure. Take profit is also most recent point of structure, which is right here, in this case, right here, and we have our take profit right there. Now, if you want to talk about scaling in, you could have easily put your little kind of trend line, rejection, enter, 1-to-1, 1-to-2, perfect running trade. You could have also scaled in down here, and took it all the way up to there. But yeah, this is this video. I hope this video was very helpful to you guys. This is where you should put your stop loss and take profit outside of a fluctuation zone. Let the market breathe, give the market some room, and yeah, then that way, if you do that for a month, your stop loss wouldn't be getting hit as often as if you just put your stop loss somewhere random, or have a very. I know a lot of people. Some people have a strict pip count stop loss. They're like, oh, I have to have a 10 pip stop loss, or I have to have a 5 or 10. Dude, you actually don't. Trading is when I tell someone, yeah, I have a 40 pip stop loss, I'd be like, what? 40 pip stop loss? No way. I'm like, dude, it's where it should be. No, max I'll have a 10 pip stop loss. Well, that's why your stop loss will be getting hit so often, is because you just have this stupid. Guys, put your stop loss somewhere safe, and you'll be safe. And yeah, guys, I hope you found value in today's video. If you did, subscribe, comment, like, and I'll see you in the next video. Peace.